Hello, this is the tradesight Stocks and Futures Index Preview and U.S. Economic Data Roadmap for the week beginning Monday, July 22nd, 2013, ending Friday, July 26th. We are starting a new options cycle. We just closed out July's options on Friday, the 19th. Led to a fairly flat trading session as usual with expiration. Volume was strong early, which was simply the options positions being closed out and rolled and then died out for the rest of the day. We are now starting the August expiration cycle. It tends to be one of the lowest volume cycles of the year, although August tends to be a terrific trading month for stocks on average. So we'll see what that means, but it may mean a slow Monday. We're also in the middle of core earnings. This is the 8 days of core earnings starting last Tuesday, Wednesday, Thursday, and then Friday, Monday, and then Tuesday, Wednesday, Thursday. It picks up again. The biggest number of earnings releases will be out this Thursday. So we'll be looking for that to make some gaps in the market and maybe some extra volatility, maybe even some volume. We'll see what happens. Obviously, this last week saw some incredibly poor volume, especially 3 of the days, and overall one of the lightest volume weeks of the year. Still managed to squeak out some decent trading days, but it was certainly slim pickings, and Friday was not a factor. Here's a look at the S&P daily chart, and again, we've watched this trend line for a long time, and you can see we're using it awkwardly as resistance as we drift upwards. So the market is respecting the line, can't get back above the line, but yet, as you'll notice, you can keep moving up without getting through the line. So it's interesting to see it. We'll see if at some point in time we do actually break that line and roll to the downside. This is again the daily chart of the S&P 500. Here's the NDX, Nasdaq 100. Took a little bit of a hit on Friday on Google's earnings in particular, and so it didn't have quite the same trading week as the S&P. Here's the SOX, the semiconductor index, rolled over again on the same type of news. Here's the biotech index hitting new highs again on Friday. So biotechs are strong. The old saying, banks and biotechs will lead the market. The S&P is certainly trying to head up despite the fact that it cracked that trend line a while back. Let's take a look now at the futures from this last week. These are 10-minute bars, so you can see the entire week. And you'll notice from high to low, the ES was only in about a 24-point range. Monday, very light drift higher. Tuesday was a little more volatile. We got a gap up Wednesday that has not filled. We have left a few gaps behind lately that we still need to go back and get at some point. Wednesday was the flattest day of the week. Very disappointing session for the broad market. Thursday, we had a little more volatility. And then Friday climbed. And again, most of Friday, if you look at this plunge here at the end on Thursday, this is actually right after the stock market closed. This is the Google earnings release. And then we kind of recovered that on the broad market, held extremely flat all day. Last 20 minutes or so of the market pushed higher, and then the 10 minutes after as well. So that's kind of a breakout on the cup. But overall, it was a pretty flat session, and that's just some last minute option unwinding. And if you factor that, take that out, there was even less movement in the market this week. Now here's a look at the Nasdaq futures, kind of a different story, obviously. You can see the drift up Monday, pretty contained Tuesday, equally contained Wednesday, just like the ES was. Thursday, a little more volatile, and then you can see the Google earnings hit, the gap down Friday, and then the flat action from there. So we have what we call a bifurcated market in the sense that the futures on the broad S&P are not even remotely resembling the Nasdaq tech market. Here's the oil futures as well. Climbed as high as 109 Friday morning. Notice the Seeker 13 sell signal right at the open on Friday. That ended up being pretty much the top. That's really remarkable. So let's take a look now at the economic data that's coming out this week, see what we need to be prepared for. Again, it's the beginning of a new option cycle, the back half of earnings here in the U.S. There's not a lot coming out, so let's take a look. There's no economic data to focus on. You've got existing home sales Monday morning. It's a non-factor for Forex. Tuesday morning at 9 a.m., the FHFA housing price index. It's a non-factor for FX and can be a factor for stocks only slightly. Here's the new home sales and crude oil inventories on Wednesday. Again, doesn't affect the stock market much. So we've got all home data is really all we have until from Monday to Wednesday. Thursday, the weekly initial and continuing jobless claims data. Friday, durable orders, not a big deal. I'm sorry, that's Thursday as well. Natty gas on Thursday, and then Friday, Michigan sentiment. So usually we have something to focus on, and at this point, all I can really say is Monday probably slow to start the new option cycle, but the focal point of the week is still the core earnings, and especially all the ones that come out Wednesday and Thursday. There's nothing else to focus on. I believe that if we look at next week, We should see, yep, there it is, the on the 31st, the last day of July. It's a Wednesday. That's the first look at GDP for the second quarter. That can be a big one. So we'll be factoring that in next Wednesday. And then they've got the unemployment rate the following Friday. Charts, as usual, brought to you by eSignal 11. We will be making calls all week and in the trading lab. Good trading.